Welcome to the Market Moment. My name is Matt Walters, and I'm here with John Martfeld and Lee Mackey. Got some really good topics today, but before we get into that, remember you can join the Market Moment online community by hitting the subscribe button. Also, we have a brand new series alongside Data Brief. It's called Market 101. They're videos that give basics on finance, economics, and of course the market. The first episode is available right now if you want to go check it out. So definitely check out. We're putting out a lot of videos, a lot of content. So check out some of the new YouTube channels. Give us a like, subscribe, and comment. We would appreciate that. So let's jump into it, guys. The first topic is the Magnificent Seven's momentum collapsing. UBS Investment Bank Chief U.S. Equity Strategist Jonathan Golub downgraded 6 of the so-called Magnificent Seven stocks, Apple, Google, Microsoft, Amazon, Meta, and NVIDIA, from overweight to neutral. His call comes as the Magnificent Seven, which also includes Tesla, just had its largest weekly market cap loss in history. All 7 of the big tech leaders are off their recent highs, as highlighted by a 10% single-day drawdown for NVIDIA, its worst one-day price performance since March 2020. So just this kind of goes on to say, well, let me read this part real quick. The shift in is in where earnings are growing the most could be disruptive in the near term, Golub said. But given increasing signs that the U.S. economy is growing faster than expected this year, he thinks a broadening out in the earnings performance over the next year keeps his 5,400 call in the S&P to the end of 2024 in play. This target remains supported by broadly positive fundamentals and a robust economy. So, doesn't sound like he's overly pessimistic about the market as a whole, but just saying, hey, these big tech names are struggling and might continue to turn over.
Well, naturally, I mean, my gosh, they've been on a holy terror, right? I mean, they're doing great. Tesla has its own problem. I mean, they've got the electric vehicle sector is being attacked.
Very different story than most
totally
of the
different
others.
Story, yeah. So I don't know. The others I am not concerned about at all, right? I mean, they've hit all-time highs. They've continuously hit how many all-time highs over the last 3 years for NVIDIA and Microsoft on all of those.
Right.
So naturally, there's going to be a moment where they stop hitting all-time highs and they come back a little bit.
Sure.
Some people would say a buying opportunity. You know, NVIDIA goes down 10%. Maybe that's a buying opportunity. The problem is that it's still up 1,000% over the last 3 years or whatever. So that little dip is not that worrisome. But the good news about the S&P 500 broadening out and the economy still working is that it's no longer dependent on those 7 stocks to make the S&P 500 go. And I think that's the most important part of that.
Yeah, I mean, if you look at the I was pulling up this chart real quick. You know, if you look at the S&P 500 year to date, the S&P's up just over 5%. Apple's down almost 14. You know, there was a big thing. You know, Apple was the biggest stock in the market, and there was a lot of people asking the question, like, can the market withstand Apple selling off?
Yeah.
Right.
Right.
And it's proven that, like, so far, anyways. I mean, it's the market overall has held up just fine, and Apple struggled.
You know, I think the headline was, you know, is the momentum over for the Mag 7? It depends on how you define momentum. I do think we're seeing a broadening out of the other 493 stocks in the S&P. They're the leaders.
Right.
However, I think if the economy begins to slow, I think if you begin to see cracks, one of the things that was talked about at a conference I went to a couple weeks ago was if cracks begin to appear, if consumer spending slows down, then the first place you'll probably see the slowdown is in the Mag 7.
Right. Naturally.
I mean,
yeah, it's the easiest place to take from.
Absolutely. Yeah. And so, you know, I don't think the companies' momentum is slowing down. I think you could argue that companies like Meta, Facebook, NVIDIA, I mean, we're in the early innings of this AI, you know, new, what's the word I'm looking for? This
new frontier.
Yeah. And so I would say no. I'd say their momentum as a company is just beginning. Now, does that translate to stock price?
Yeah.
You know,
Maybe.
I don't know.
Yeah.
You know, I saw something this morning or late last night. You know, there seems to be growing bipartisan support in Washington for a ban on TikTok, giving them kind of a 1 year the owners who are Chinese,
Right.
1 year to sell their interest in the company. The benefactor, if TikTok is banned in the U.S., is Facebook.
Right.
I mean, there's no other company that stands to benefit the most other than Facebook. So I think Meta, which was kind of a couple years ago, kind of left for dead.
Oh,
you
sure.
know?
Yeah.
I mean, they
Zuckerberg went through a bad time for a
he
for a
did.
year.
You know, he put a lot of his money in the metaverse.
Yeah.
But I think that from a company standpoint, I think the momentum is just getting started. Do I think it translate into continued run up in stock price? You know, that remains to be seen.
Right. Yeah. These things are the 7 that led us last year, and I think we all agree that last year was a little bit, that's an unhealthy market, right? When 7 are leading, the good news, as Matt pointed out, S&P up 5% with Apple dropping 14. That is a fantastic sign for the market. That's strength,
Right.
and it's spread, which is what we've been talking about. I have been the pessimist on the panel, obviously, and we know if anybody's watched any of the other ones, they know I am the pessimist. Lately, I'm a bull normally, but lately, just things have bothered me. But this is a good sign to me, and it doesn't mean that. But also on the front of the market, and I go back to the 20 analysts that predicted the market in 2023 and 2024, and they're so far apart. All of this stuff is hard. It's great to get all this information and for us to talk about it on this show, and that's all great. But ultimately, none of us really know where it's going, and that's where the financial planning is the most important key of our existence.
Well,
but this is fun to talk
You know,
about.
and Matt made the point earlier that, you know, for the last several years, you know, most people thought that the market could not go up without Apple's participation.
Right.
Apple's kind of in a lull right now.
Yeah.
You know, they're now Apple's notoriously quiet.
They're getting
you know,
crushed in China.
They're
Yeah, China's putting
absolutely,
pressure on them
absolutely.
all kinds of ways.
And so you know, you never know. I mean, Apple is a pretty quiet company.
Yeah.
And all of a sudden they could announce something that just blows everybody's socks
Yeah.
off. But you know, there's not a lot of excitement coming out of Apple right now, and it's reflected in the stock price.
So when I started in the business 25 years ago, Apple was nothing, you know, and then the iPhone came out, and you know, all that. I mean, they were not nothing, but they were just a stock, you know, and it was up and down. But for the last, let's say, since the iPhone came out, you never bet against Apple, in my opinion. They're cash on hand. They're always looking for the next thing. They're always working. I kind of think I'm looking for an opportunity, for a buying opportunity for Apple, because I just continually believe their company is going to fight through whatever troubles they're having. And I've seen it happen multiple times in the last 20 years. They always make it through. So, yeah, they need to be part of the rally and all that stuff, but they've done so much for the market. They've given so much. A pullback is natural. And
Well, I think
I'm not
some of it,
concerned.
you know, looking at the last, let's look at the last 6 months. Look at the last 6 months. Apple's down almost 4%. Everyone else of these, you know, bigger names,
Big names.
16, 24, 41, 60, and 96.
Where's Tesla on there?
And I didn't even pull up
Because
Tesla.
they're down.
Yeah.
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 So,
But anyway, yeah.
the Tesla's down 30%.
Yeah.
But for there to be some selling in these names, I mean, you're up 6, and you know, I was looking at the 1 year chart. It's obviously even more. So for there to be some selling, that money, my thoughts on that money's not leaving the market.
No.
Right? It's going from Nvidia to another name.
Right.
Right. And so that's why you see the market as a whole holding up pretty well.
Right.
Because that's not money that's selling and then going sitting on the sidelines. It's just coming
Yeah.
out of Nvidia and going into something else,
Right.
which is very, I think, normal and rational. Right.
Apple is a stock that you hold. I just don't know if you buy. I mean,
Right.
it's that stock kind of like Amazon, where you just want it to be a part of your portfolio forever and ever. Amen.
Right.
But you're not actively buying Apple.
Well, as much
Right,
as these
right.
companies are up, think if so all of the funds, all of the, you know, a lot of funds have like waiting restrictions. A lot of individuals, you know, they'll let a company run for a period of time, but then they have to pull
They
back
have to
their
pull back.
position.
Exactly.
Right. And so
Yeah,
there's
yeah.
natural selling that takes place at certain
Like quarterly
opportunities.
increments on some of those ETFs
Yeah.
that they'll rebalance. because of that.
Right.
But then you've got some that every 6 months, whatever. But there is a selling that happens.
Yeah, a lot of those people
Not
aren't
because they wanna
selling
sell.
all of
Yeah.
their NVIDIA stock.
Exactly.
It's just
Yeah.
they're trimming, right? Because it's
Exactly.
up 200% in the last
I think it's healthy though, and because stocks like companies that compete, who competes with Apple really, but like there are competitors to Nvidia that are trying to get in that field, trying to pressure them, AMD or some others, and so I think you see run up like this, peel off a little bit, go try some of the other competitors who haven't run up to the same degree but are trying to do the same things. So spreading out,
And with regard to Tesla, you're seeing it now. GM reported earnings today and just blew it out of the water. I mean, they beat on the top line, bottom line, and they raised their guidance. And I heard somebody say this morning, GM is just selling the cars that sell.
Right.
They're getting out of, everybody's getting out of electric. No one is going to be selling electric cars. Everybody's going back to hybrid.
Right.
And so
The plug-in hybrid
so
is a new deal.
is that good or bad for Tesla?
I think it's bad. As a car. I mean,
Yeah.
I think Tesla is making a lot of money on their batteries.
Yeah.
But I think as a car, it's not good because all of these other companies can kind of go both ways.
Right.
We're gonna provide you some electric, but also we're not getting rid of the gas.
Chinese are actually they've got electric vehicles that they're spreading out through Asia, right? And it's cheaper labor. Everything is cheaper that they're doing, and so they're able to sell them much cheaper. So I think that could get into some of Tesla's market, which
Sure.
I think
there's
concern
a lot of
Tesla.
competition.
But I think the U.S. competitors to Tesla, you look at Rivian, and I mean, you could go down the line. Rivian's probably one of the strong, but they're all struggling. I mean, pretty mightily.
I would
And Tesla to me is the one that might hang on.
don't save this, but like I would venture to say like the Rivians and some of these other will be out of business in 3 years.
Yeah, I think Tesla's going to hang on, and Tesla's going to be the one, because I think electric vehicles are with us forever, even if they're not going to get to the level that some people want them to get to because of lots of reasons. But I think Tesla will always be that one name that if you want an electric, that's the first name you think of. Tesla.
I think a big hurdle that an all-electric car company has is the access to charging stations.
Oh, sure.
And it's
yeah.
it's very simple, but when we were out in California in January, all of our Uber drivers had Teslas.
Yeah.
And I assumed wrongly, but they prefer Teslas driving around in town because there's charging stations everywhere and they get great, life out of the battery. But they hate them for road trips.
Sure, yeah.
Which is the exact opposite of a gas engine. Gas gets worse gas mileage driving around town and better on the road.
Yeah.
Because they say that, you're using more battery when you're at 70, 80 miles an hour, and you're having to go only routes where there's charging
the future of
stations.
EV, the downside to this is so dependent on like legislation and regulation that's a tough spot to be, because I don't think the organic demand. I just speaking personally of people I know.
Yeah.
The people that are just naturally interested in going to buy an electric vehicle is not exploding. Right. That's not a growing. So.
Well, if you can't drive across country in it, because you can't, and there's been plenty of stories where you've had traffic delays or storms or whatever, and then the electric cars somebody has to come get them and pick them up because they get their battery runs out, the cold and the whatever. And it is actually very frustrating. The other thing I think that hasn't hit the market yet that will, and it will be, to me, it'll be kind of a interesting inflection point for electric vehicles when the batteries start wearing out on these cars, which is going to happen soon because we've had, 5, 6, 7 years of Teslas. I don't even know how many years we've had, but the batteries are going to start dying. And to replace the battery is almost as much as buying a new electric car. And when that happens and you see all of these pretty little electric cars that aren't that old, but they're unusable because you have to go buy a $25,000 battery, I think that's going to be a massive problem, and it's going to bring people back to the plug-in hybrids or the hybrids and whatever.
Yeah.
Yeah.
Anyway.
All right. So don't buy Tesla.
Matt said that.
So John just mentioned a minute ago talking about cheap Chinese goods. So bipartisan worry uniting Washington. President Biden's recent call for the tripling of tariffs on Chinese steel was just the latest example of how voters will have a choice this fall that is one of degree as opposed to changes in direction when it comes to China trade. Both Both camps are lining up behind increasingly protectionist plans. Biden is calling for tariff hikes on select Chinese sectors. Trump wants 60% tariffs across the board. His plan for 60% tariffs would impact a wide array of goods and would impact the trade in trillions of dollars of goods projected in the years ahead. So Trump's aides are even reportedly proposing more extreme measures, such as devaluing the dollar, a move that would further restrict imports from China, but also one that would reignite inflation. So thoughts on this? It's always interesting to see what both sides agree on. It's always like random stuff.
I could tell you it's kind of interesting because this would not have been the case when on the last election, right? Anything that Trump was for, the opposite party was against, right?
Sure.
So the fact that they're on the same page here tells you there are troubling signs of what China is doing. Just go back in the 90s when China coupled its currency to the U.S. dollar, right? They're talking about Trump wants to decouple.
Yeah.
Well, that's when it was coupled, right? And China needed that desperately. If you go back and look at their economy, we helped them get from the dark ages to the today's time.
Sure.
We fast forwarded them on a fast track. Now they are intent on keeping going forward, right? And they're not going to worry about, I think that's the concern, is that it's a communist government ultimately, even though they have some capitalist little things they try to do. They try to get the best of both worlds.
It's all for show.
It's all for show. But I think this is interesting. So now I think the eyes have opened from both parties that we've got to be a little tougher on China. Again, go back 4 years ago, that was definitely a complete split between the parties. Now with the election coming up now, it's funny how that's suddenly becoming a problem for Joe Biden, when it wasn't 4 years ago. But anyway, that's my...
There's always going to be cheap goods that come out of China. I think it's always going to be a political issue. Either one of y'all heard of the company Shein? Have y'all heard of that clothing company? Your wives have. Zoe probably has.
Okay.
Great. I'm going to immediately look at my credit card statement.
Well, Shein, my girls love it because you
Okay.
can buy primarily women's. I don't know, it may be guys too, but cheap clothes.
And good quality, as you're saying.
Fairly good quality,
Yeah.
very inexpensive. I mean, you can buy shirts for $8 and
Wow. Okay.
$10.
Yeah,
and
yeah.
It started in China. They, in 2022, became the world's largest fashion retailer.
What?
Wow.
They have just recently moved to Singapore for some obvious reasons, but they've left their supply chain, they've left their manufacturing all in China.
And I'm assuming they sell all over Asia too, right? India,
Everywhere.
everywhere.
But
Right.
If now that we're talking about, it'll probably show up on our phones.
Yeah.
But they have been in the news lately because going public. Do they go public in America?
Oh, right. Yeah.
In Asia, but Shein, SHEIN,
Okay.
is the name of the company.
I'm gonna look at
It has
that
become
later.
the world's largest fashion retailer, and
Wow.
And you'll see. I mean, my daughters have gotten boxes of it, and literally there'll be 2 or 3 boxes, and it'll be $80.
Wow.
But it's.
I mean, what are y'all's thoughts just generally on tariffs in general? Like,
Well, they're trying, so that keeps American goods where we can.
It protects us.
It protects us. So I mean, I get it on that front, and I think about.
I mean,
like
I didn't ask you to explain what a tariff was.
Well,
What are your
the,
thoughts on
Oh, I
that?
think we should do that, and
Yeah.
I think that China can kind of cheat the system because they do not have labor laws. They do not have unions. They don't have anything. It's all.
Trying to equalize the playing field.
It's
a little
kind of
bit,
equalizing the playing field. They can do things and not pay their people anything.
Yeah.
And then therefore they can sell stuff far less. But it's kind of almost like it's not the lack of a better term, but almost kind of dirty stuff, right? Because it's coming from who knows what kind of labor force and what they're being treated like. And so that's where China has a huge advantage, and the tariffs just kind of equalize that field.
Sure.
And when Trump, that was a big part of his presidency is slapping these tariffs on China.
Yep.
And it was such a lightning rod. I mean, you would have thought that they were this horrible thing that we were doing, but he was trying to protect American businesses.
American businesses, yeah.
I don't think it'll ever be equal.
It'd be interesting to see how China reacted if we truly went down that path and stuck with it for longer term, right? Because we're obviously such a significant part of their continued
Sure.
growth.
Sure.
So they need our markets open to them. And so now it's inflationary, right?
Very
I
much.
mean, we would have to accept, as Americans, we have to accept the fact, like, hey, if we want to make things here, produce things here, make it more equal across the playing field around the world, that all sounds great. But, that $8 shirt's going to cost you $32.
Yeah.
Right? It's just a reality of it.
Think about it on the car side.
And to that point,
Yeah.
the consumer, they don't care. They just want,
For the most part,
they
it's
don't
just like,
care.
Oh,
yeah,
no doubt, no doubt.
If we're looking at two
Yeah.
shirts, one's 12, one's 30,
Yeah.
can't tell the difference. Most people are going to buy a $12 shirt.
Well, and that's why, think about Japanese, like Toyota, Honda, have been so successful in the United States. And what do they have that the United States doesn't? They don't have unions.
Yeah.
Right. So there's some stuff on our side that causes
sure.
prices
Sure.
to go up dramatically
Sure.
that I'm not for. I think that we've overdone that. We're over using that stuff, right? And it's created higher prices where China has none of that. So it's like two separate ends of the spectrum. We're dealing with all this that we have to have cost higher. They have none of that, and so their costs are extremely lower. So there is like a problem there. You could run all of those guys out of business. Could you imagine if the union leadership went over to China and tried to open unions in China?
Yeah. But to Matt's point, it is inflationary. So
Yeah.
Yeah.
I mean, you got to kind of put your money where your mouth is.
Exactly.
At some point.
Yep.
So, all right, last topic, companies filing bankruptcy. So Express files, apparel retailer Express files for Chapter 11 bankruptcy protection, as well as Red Lobster. Brand management firm WHP Global and others on Monday sent Express a non-binding letter of intent to possibly buy a substantial majority of its operations. The bankruptcy will also involve some 95 Express locations and all Up West stores permanently shutting their doors. Red Lobster is reportedly considering filing for bankruptcy to relieve financial pressures that have weighed on the company for years. According to reported Bloomberg, citing people familiar with the discussions, Red Lobster is weighing a Chapter 11 bankruptcy to renegotiate burdensome leases, blah, blah, blah. So, any thoughts here? I haven't looked at like a bankruptcy.
can they just make sure
Chapter
they don't,
11 is just restructuring. So
Correct.
they're not close. They don't necessarily have. I know Express is going to
shuttering.
close some things down, but that doesn't mean they're going out of business,
No,
right?
it just means they want a different way to pay their debts.
Yes, yeah, they're restructuring, which is common if you're struggling, which obviously they're saying that they have been.
I'm surprised we haven't seen
More,
more.
And I think you will start seeing more.
I think over the
this
next
is-
12 months,
The longer rates stay
Yeah.
higher,
Yes.
it's
Yeah.
right, because all of we're only a couple years into this higher rate,
It has not even
regime.
flown. It has not flowed through the economy yet.
And
No.
and so
No,
you have a lot of
it's
that
going
debt
to.
is fixed for at least a period of time,
Yeah.
if not
Yeah.
long term fixed. And but yeah, it's fixed for a period of time. So if rates come back down in the next 12 months, then you may not see a whole
Yeah.
lot of that because they will be able to refinance and do the things they need to do. But if rates stay high for long, like
and
the poorly managed
Yeah.
companies that have just been hit harder for whatever reason are going to kind of get to a point where they have to do something.
Yeah.
well,
I agree.
in the restaurants, you oftentimes see it in restaurants, food prices, and at some
food
point,
prices in a year off, with COVID.
yeah,
So,
yeah,
yeah,
at some point
still
you can't
recovering from that.
continue to pass that along
Yeah.
to
Right.
to the consumer.
Yeah.
And then retail. Those two industries seem to always.
With your clothes coming from China at $8 a shirt compared to 40, their retail has pressure all over the place.
Yeah, I'm surprised that we haven't seen more bankruptcies.
Yeah, me
and
too.
We probably will.
I think we're going to start seeing more and more.
You know what will be interesting? This is kind of off topic. Is over the next 12 months, do we see any more banks?
Struggling. Yeah, that could happen too.
Yeah. Jamie Dimon kind of warned about that in his letter, that if rates actually go up, which I don't think any of us think they will, but if
Right,
the
if they
Fed
did,
if
yeah.
the Fed has to hike rates a couple times, then you could see some real stress.
Hey, I actually think it's a higher probability than we're giving it credit for. I think the Fed is not doing anything because of the election and so on. But
Probably.
I think there is if the economy continues to soar and inflation does not cool, because remember his main focus was to get it down to 2%, and he would raise rates until it happened. I know in election year he's probably not going to, But anyway, if that did happen, I think that's a bad sign.
You can mark the tape. This is episode 199.
Yeah.
You can mark the tape. I don't think we ever see 2%.
No, I agree. I agree with you totally. I think they're going to have to change their tune on that.
I think so.
But I mean, if they go back to that premise, they would be raising rates right now. If they
Sure.
really truly believe that they needed to get to 2%, I think
Yeah.
they'd be raising rates.
Yeah.
Still, which would not be good.
All right. Anything else?
No,
No,
good-
that's it.
It's good topics.
It's
I mean,
good topics, yeah.
There's a lot going on right now.
Yeah.
And, the deeper we go into this year,
Oh yeah.
things will get a lot more interesting as far as just, geopolitical,
yeah.
politics, election year, we are right in the need. We're going into earnings season. This will be a critical one.
Yeah.
I really do. I think this will be a big 2 or 3 weeks.
And the world stage, I think, the Iranian, Israeli, Hamas, all that stuff is just getting worse, right? It doesn't seem like it's getting better. In the United States, we have our own problems with the rallies and so on that are getting violent. This is going to be maybe a hot summer. I mean, for lots of reasons. And
One thing I
keep an eye on it.
One thing I learned in New York a couple weeks ago that I did not know: the European Union, the 13, 14 countries, there was only like 2 or 3 of those countries that had a military. But
Say that again.
of the European Union countries, and
Yeah.
I think there's 13 or 14 of them.
Yeah.
There's only like 2 or 3 of those countries that had a physical military. But after the Ukraine invasion, Russia invaded,
Yeah.
more of those countries are now beefing up a physical military, missiles, tanks, guns.
This is going to sound like I'm a big Trump fan because I've said 2 things about Trump that he did in his presidency. It doesn't mean that. But one of the things he pressured the EU to put their fair share into NATO, if you remember that. And that's when it exposed that these countries were not putting their 2% of GDP towards military, and they were not doing it. And then Ukraine was invaded, and it's kind of I think it's woken everybody up, and it should. I mean, that's a true threat. But anyway, yeah.
We digress.
Yeah, I have no idea how we got there. I wasn't listening. Really.
Yeah.
But- so we had a comment from last week. Good question. Let's please not spend too long on it.
Okay.
Why are so many countries buying up gold? Even the U.S., but especially China, would be interesting to see a trend of global buy-up by region of the world over the past 10 years. So I was kind of looking to see what I could find real quick online. I couldn't find the 10-year trend, but
I don't know. There's my response. You said keep it short.
yeah, I have no idea. I mean, it is looking at 2023. So on the World Gold Council website, no idea there was such a thing. China, Poland, Singapore, Libya, and the Czech Republic bought the most gold last year in terms of increases.
Well, inflation around the world is going crazy. I mean, gold is the answer.
I don't think it's as an investment. I think it's as a protection.
It's a protection.
Oh, sure.
Yeah. And I think inflation is probably a.
And for
I
those
think people see that.
For those who are interested, the countries who sold the most, Kazakhstan and Uzbekistan.
Those are the first 2 ones I would have.
Yeah,
Yeah.
I've definitely had those on
Yeah,
top.
pretty
of my list.
obvious.
But just don't ask me to spell either one of those.
Or point them on a map.
Correct.
All right.
A
Well,
lot of consonants, not a lot of vowels.
yeah, I think the moral of the story is that other than just hedging
Sure,
their
that's what they're
current,
doing.
their currency,
Yeah.
protecting
Yeah.
the stability of their currency and all that, not experts on that, so we won't pretend to be.
Yeah.
But anyways, appreciate you guys listening. Be sure to leave us a comment. And if you're an audio listener only, you can submit your questions and comments to the market moment at mach1fg.com. So that's the market moment at mach1fg.com, and there'll be a link in the show notes. So we appreciate you guys listening, and we'll see you next week.